So this is going to be recorded, and as Gonzalo will remind us in a little bit here, this will get sent out to folks that were able to register. A couple more attendees just jumped on, so let's give them another 60 seconds and then we'll get started. It's cool. I see a few names that weren't in the pre-registered list, so I think some of your friends jumped on uh, after hearing maybe about it or realizing they had the availability today. This is good. And with that, it's 6:02. So why don't we go ahead and get started? I'll present my screen and then I'll hand it over to you, Gonzalo, to walk people through and introduce Oak Park.
All right, all right. So, good evening, guys. Thank you all for being here. I'm really excited for this project and to share some information with you tonight. First, I wanted to tell you a little bit as to why we're all here. After stepping out from my car dealership business a few years ago, I decided to go back into real estate. And I realized that buying one property at a time wasn't gonna take me to the path that I envisioned. So I decided to take a real estate course or program, and that's where I met the sponsors of this deal. I got to know them a lot better, and I got to see their track record, which is really impressive. And I was invited by Gabe and his partners to join to invest in this opportunity, Oak Park. Even though they have already raised most of their capital, they have given me the chance to present to you guys, and I wanted you to hear about this project directly from me. So thank you so much for being here. Let's dive into Oak Park. So first, a little disclaimer before we begin. I want to go over this slide. We are not financial advisors, CPAs, or attorneys. This is merely for informational purposes. We encourage you to do your own due diligence, ask any questions, take notes, review the materials we're going to send you. Like Gabe mentioned earlier, you're going to get a copy of this presentation after we're done tonight. So please feel free to read over it at your own pace. We don't want you to feel like you're in a rush to make a decision or read this in 12 seconds. It's a lot of information. So just read it at your own pace. Our goal tonight is simply to help you and give you some information about this project and see if it aligns with your investment goals. As many as you know, I've been in real estate for the last 24 years, and my risk tolerance level might be different than yours. However, I feel that this opportunity is going to be you're going to like it because this is a great opportunity once you see the full picture and Gabe and I tell you more about this project. So let's jump in. In this presentation, we're going to cover the few items that you see on this list. Well, here's what to expect, right? First and foremost, I want you to learn more about the team behind the project because they are the ones that put it together. And one of the most important things about investing in any business, mostly in real estate, is to know the people you're going to invest with. So I'll introduce myself, and then Gabe will introduce himself, and the team will also cover the deal itself, the sub market, and the most important thing, the location. We'll also look at the business plan, financials, and how the plan is going to get executed. And finally, we'll cover how to invest, how you can double your money in the next 5 years. A little bit about me. I'm Gonzalo Barajas. A lot of you know me already. I've been in real estate for the last 24 years and in many other businesses. I mainly been in real estate, in residential, land development, industrial, commercial, and recently mostly in light industrial. Over the years, I had the opportunity to be in many successful transactions, closed many deals, sold many properties, bought many properties. And one thing I'm proud of is that in real estate, I've never lost money. I've lost money in other businesses, but not in real estate, that's for sure. I truly believe that real estate is one of the safest investments in the world when done right, and I feel Oak Park is one of them. I believe also that you make money when you buy, not when you sell, and I think the price that we're getting this property at is the right price. The team has put a lot of effort into finding this deal and underwriting the deal. I believe again we're buying at the right price, but I'll let Gabe introduce the rest of the team now.
Thank you so much, Gonzalo. I'm excited. I know I look like a little kid, but I've been doing this for a while now. 2016 is when I bought my first apartment complex, and in that journey, it's taken me to Dallas multifamily, where we now have um, almost 1,000 units. And after we purchase this property, we will have over 1,000 units as the lead sponsors. What that means is, we are doing the day to day. We are in charge of managing the property management company, the construction crews, and overseeing the business plan. Gonzalo and I met through a mentorship program, an education program that he came to so that he could feel supported as he renews his journey in commercial real estate. And me and my partner Aaron Katz had been in that group for a while, buying properties in the 1 to 300 unit range in DFW. Very excited about partnering just in time on this one because Gonzalo brings a substantial amount of experience. He's seen multiple business cycles, and real estate is a cyclical business, and he hasn't lost any money in those cycles. And that's one of the claims to fame for me and Aaron. Aaron and I have not to date lost any money on any projects in our single family or our multifamily investments. And so, with that, I will state that Aaron would have been happy to be on tonight, but he did have a family member in town. I said, "Hey, spend some time with your mom. She's 85. Take your time. Me and Gonzalo, we've got this." But we're very excited to talk to you about the property. Before we do that, though, the most important thing is the team. Always, I had on there that we're nearly 1,000 units as lead sponsors, as the people to put the deal together, to do the hard work. But before that, I was a passive investor. I invested in these deals. I put my money when I was in consulting and worked for Salesforce also. I put my money into these deals, and it was always really interesting to see which ones performed the best. The best performers were the best led deals. It was really betting on the jockey, not the horse. So when it comes to single family, I think you can look at the individual, right? But when it comes to multifamily or commercial real estate, it's really about the team. We have developed an amazing team for these types of properties. Everything from finding the deals and procuring them with all the relationships we have, underwriting them well to make sure we're paying the right price for them, and ultimately the most important part, which is delivering on the business plan. So, with that said, let's dive right into Oak Park. Gonzalo, will you take us through what you loved about this deal in Irving, Texas, and just talk a little bit about the location, what was good about the deal, and where we're going to create some value?
Yeah, basically, I mean, Oak Park stands out because of its location. I mean, it's in the middle of the DFW area. It's got great access to all the highways. It's close to Dallas, close to Fort Worth. The historical occupancy has been great. It has been 100% occupied over the last 20 years, which tells you a lot. People like to live there. And that's what I like about this project. Also, the opportunity of the upside, increasing rent, operational improvements, add amenities such as the on-site laundromat, which it hasn't had for a while. And why Oak Park? Why Oak Park? I mean, the owner of this property had managed this asset himself for 28 years. Unfortunately, he passed away. He put the property in a trust. the trustee mismanaged or failed to maintain records, and the beneficiaries mismanaged the rents. So there was a lot of mismanagement on this property for a while. And even though that happened, all the tenants stay there, and that's why I like this deal because these tenants are loyal, right? They have been staying there. Well, after a while, a second trustee came into the into the table, and he started managing the property. He brought in a professional management team that made things better. And that's when Gabe and the team found this opportunity. When other brokers or other investors passed on it, we saw the opportunity. We rolled up our sleeves and did the work. We reconstructed financials, digging into historical data, building projections. All of that gave us the visibility of finding this diamond in the rough. There is a lot of potential here to increase revenue, increase the ROI. And like I said, this opportunity doesn't come often. I've seen deals go by and they get offers right away, and this was one of them. But I think Gabe and his team made the right decision, you know, about this property. As many of you know, when you increase NOI on a property, net operating income, you increase also the value of the property, and this is how we create real value. And I believe Oak Park it has that opportunity to double the value of this property in the next 5 years. On this slide, we're going to talk about the numbers. Let's talk about the numbers, guys. We are buying this property for 7.8 million, which is roughly around 76,000 a door, which is very low for this market. I mean, this is unheard of. This is what is it, 2018 numbers probably,
16.
Dave?
Yeah, 2016. We got a chart on that later. It's kind of back buying about where people were paying per door on something like this in 2016.
So basically, this property is going to be I divided into three phases. Phase one is going to be the renovation, and you can see below the $2.2 million renovation budget, and that's going to be improving the overall state of the property, new roof, interior and exterior renovations, parking lots, common areas, new leasing office, the on-site laundromat that I talked about, and that's going to take us about a year or two. After that, we'll start distributing quarterly, probably between 4 and 6% annual divided quarterly for all the investors. And that's going to happen in year one and two. In year two, we're going to analyze the market, evaluate the market, and if the conditions are correct, Gabe and the team are gonna make a decision whether they decide to refinance this property, and at that point, a large portion of the capital will be returned to investors. So what that means is that we're gonna hold your capital and work with your capital for probably 2 to 3 years, and if the time is right and if the decision to refinance is right, then you'll get your capital back or most of it back. I just want to point out that you'll keep your equity share in the deal until the end, even though your capital might be sent back to you. At the end of the refinance, we'll continue with the project. Towards the end of the project, which we will continue to evaluate if the property is ready to be sold based on market conditions. And at that time, we expect the property to sell within 5 to 6 years. And then all the sale proceeds will be distributed to all investors, completing the 19.8% projected average return. So also in this slide, it talks about the minimum investment thanks to Craft Capital. And we were able to lower the minimum investment from 75 to $50,000. I mean, yeah, to $50,000 exclusively for this investment group. So this is the opportunity to get in a great project with lots of potential, lots of upside. And now I'll handle it to Gabe to walk us through more highlights on this deal.
Thank you so much, Gonzalo. So me and my team of acquisitions people, right? Because I mean, in my job, one of the main ones is to be tight with all the brokers in Dallas and find these opportunities. But me and Aaron Katz, my business partner, really slowed down 2021, 2022, 2023, 2024. We really didn't buy at our normal pace that we had been at before that, where we'd do multiple real estate deals every year. And that was because we just didn't see enough out there that made sense. And we decided to stop buying in certain places. So we have a narrower window of deals to look at. We stopped buying in places that had lower than $55,000 of median income. Because even though it's not really the hood in Dallas until it's like 40 or 45, it just was proving out that they were harder to manage deals if we didn't have that median income. So it took us to the middle of DFW, this area that we call the mid cities: Bedford, Euless, Hearst, Irving, Grand Prairie. This is in Irving. In that area, you've got a strong median income in the working class communities. So this is still a C class deal. This is a 1970s deal, as you can see from the outside of it. And I'll talk about what we'll do to that in a little while. But as you can see from the outside of it, it's not the prettiest to look at. This is definitely like workforce housing. But it's in a really high demand, high growth submarket in Irving. I'll talk a little bit more about the location down the road. One of the things we changed on what we look at is we only also now buy in school districts that are solid. So we are only buying in B or higher school districts as is rated by niche.org. And that helped us to create these workforce housing communities where there's some stickiness to the tenants. So like if the tenant loses their job, they're much more likely to do everything they can to stay in this asset because their kids may or may not go to the local school. Now, not every tenant has kids, but a larger percentage of the apartments in this area have families tucked into these two bedrooms in particular because they have these gigantic closets and they can fit an entire family in a two bedroom, one bath. And at the end of the day, I think because of its location, the opportunity came to us and we said, hey, we've got to dig in deeper. And I think Gonzalo talked about it earlier, but when we dug in deeper, we realized it was a much better deal than it appeared from the outside as we were looking at some of the initial financials. It only had 5 months of financials at the beginning. So it was a pain in the butt just to even recreate what a 12-month financial would look like. I knew that that meant there would be less people going and chasing this deal. And it turned out to be just the case. The brokers were like, why are people not showing up for this thing? It's on a great discount. In addition, Gonzalo had talked about this, but because of some of the mismanagement, they chose to present their financials in a way that made it look like the tenants weren't paying on time. We dug in and got the bank statements and found out that all of the tenants that lived there paid on time. And there was a huge opportunity, not just to bring this thing and fill it up with more paying tenants, because it had dipped a little bit in occupancy, but also to then push the rents beyond where they currently were at. It was way under on rents. And so with all of that, the last point I'll make about the asset as I flip over to a better description of the asset is that it has one of those attractive unit mixes. You don't want to see all studios and one bedrooms in a workforce housing property like this because those can be very difficult to get tenants that stay longer. What we loved about this asset is it has a little bit larger unit sizes and it has a good mix of two bedrooms and one bedrooms. So you can get some families, but you can also get the guy that's just there with him and his wife, and they both are working professionals. A 7-building property located smack dab in the middle of Irving, one of the best submarkets in the country. And I'll talk more about that submarket later. We really don't have to do a lot to this property. So this isn't the type of property where you need to have like a resort style swimming pool and fancy smart locks. It's a very basic concept. if you provide the tenants here with, water that gets hot when they try to take a hot shower, and an apartment that gets cool in the hot summers here, you do the basics and you bring it back to life and have be a place people can be proud of to live. They will pay for that. It is a very strong submarket in terms of occupancy and rents. So all we need to do is bring back on the on-site laundry, spruce up the leasing office, add some reserved parking, which will bring in additional income. And the last part, which is the funnest part for me, is after we make it more look like the mock-up you see there on the right-hand side, we're going to add in a dog park at very little cost to us. We're essentially adding two gates on one side of a long green uh, green greenway. And what's exciting about this asset is it never had allowed pets, or at least formally allowed pets, even though a couple of tenants had snuck pets in. But we learned that next door to the asset is a $45 million investment from the city of Irving to build out what's going to be called Weish Park. It's going to be a beautiful prairie style walking park on a couple dozen acres, and it is directly next door. To date, it's just an empty old field, but the city of Irving negotiated with the state of Texas for a large grant to fix the waterway, and in doing so, they were able to get enough capital to put a very beautiful, very large park that should be online by next summer, next door to our property. So it was sort of an extra added Scooby snack, we'll call it. Once we got into the deal, we were like, ooh, this is going to be amazing. All right. So, well, we are going to allow people on site to have dogs. And it also has tile flooring, which I'll show you in a few slides, that provide for sort of a safe environment for us as investors, because it's not the type of flooring that'll get torn up by man's best friend or some cats. This is the real story, though. And I think Gonzalo said it best and eloquently, where he was like, hey, you make money at the purchase. Look, we'll make money after the purchase too. It's our job to execute on the construction, make sure everybody's paying on time, put some best in class operational improvements in place, like opportunities in the you guys might hear my neighbor's about to knock on my door, of course, as I do this presentation. So she rings the doorbell. Give me just a moment here. But the point is that on this particular purchase, I know for a fact that we bought it at the right price, kind of what Gonzalo was alluding to before, because I've studied these comps. These are new comps, not comps from 2 years ago, 3 years ago. These are very new. Everything on here has been sold since September of last year through this summer. And the purchase prices are what you guys want to pay attention to there. Dollars per square foot has never been below $1.38 in this neighborhood for the last year. Not only that, but these sale prices that you see for comp 1, 2, 3, and 4, those are at the bottom of the market. And I'll prove that out on the next slide. We'll kind of look at what's going on in Dallas-Fort Worth. Why is it a great time to buy, even if you bought one of the ones that's above our purchase, right? But what's crazy about Oak Park is because it had so much room for improvement, we were able to pay less than $100 per square foot. It's nearly 40% of a discount to market value, and it has larger units in the comp set. So it's a wonderful purchase price. The way that we found that is we had to go through over 100 deals. We would screen out everything that wasn't a strong fit. Again, median income, strong jobs, low crime, strong schools, but that was still heavy value add. And then ultimately, when we dug into the numbers, this is the one where we realized, because it's got only 5 months of financials, because not everybody's going to realize that the people that are there are paying and willing to pay more, I think we've got a shot at getting a real steal of a deal. And the last thing I'll point out is, like, we talked about the team. Aaron Katz and I have a lot of momentum in the DFW market. And because of that, we did not have to pay the most. There were 4 other bids. 3 of them were above ours. And so we won this deal without being the highest bidder, so to speak, because we have a decent track record here in Dallas of doing exactly what we say we're going to do, both for our investors, but also, importantly, for the brokers. And so we were able to steal this one, nab this one for you all, invite it to our investors alongside Gonzalo. Gonzalo was like, hey, I need a chunk here. I need some set aside. I've got some capital to move. but I've also got some friends. And we said, all right, we're okay with that. It's like, okay, also, I need you to bring the minimum down. I was like, all right, well, we're okay with that. And then he was like, also, you need to wait a week or two, and we're going to get this thing all perfect because I want to present it to them with enough time for them to get on. And as you guys saw, we moved the date for this conversation. Well, in the time where our investors looked at it, they filled all the rest of this thing up. So truly the only way you guys can get into Oak Park is by working with Gonzalo and coming in to this offering. And why I'm excited to sort of round out the offering with this group, one, just simply put, the turnout tonight's amazing. I'm really glad that you guys showed up to hear Gonzalo and I out. But also because this is the time we've been waiting for. This is why me and Aaron slowed down 2021, 22, 23, 24, and not buying multiple deals each year. But why we see this is the time to move is because we finally started to see a slight uptick in the sales prices. For example, this is data from CoStar. It's the best known third party data source. They own apartments.com, so they get all the data from apartments.com. So they use that along with a lot of other data sources. If you look at this eye chart, right, lots of different numbers popping around. But if you look at the part that I've circled that says previous upmarket cycle, it's the part of the commercial real estate, and particularly apartment commercial real estate, where it was a no-brainer to buy anything. 2015 to 2021, you could do very little wrong, okay? You see that royal blue line, that's the price per unit in Irving for similar properties to Oak Park. It's called 1 to 3 star is the rating. It's not a 4 or 5 star. It's like a older 70s, 80s, 60s vintage properties. They were selling, 60,000 a door in the end of 2014, and then it just kept going up every year, considerably, abnormally, really. We had a lot of money pumped in. There was a few blips, but really there was a strong recovery after the great financial crisis. In 2021, early 2022, things shifted the other direction. It was a down market. If you bought at, say, 140K a door, you overpaid because there was going to be a correction over the next few years. A lot of things happened, but mostly it was driven by increases in interest rate. It also was driven by low cost to build something in 2020 and 2021, resulted in a lot of new things coming online. So a lot of new development, hyper supply, so to speak. As we get into 2025, follow the royal blue line. You can see where it's projected to go over the next 5 years from CoStar. And that, once again, is returning to that very strong uptick that you're only going to find in special markets like Dallas-Fort Worth. Dallas is an incredible market. There's 19,000 cities in the United States. I'll probably repeat myself on a later slide, but Dallas has always been in the top 5 the last 16 years. And it's going to continue because there's 487 people moving here every day. That's like 2.5 apartment complexes that need to be built every day. And they're not going to be able to build those. And it's going to result in price per door of existing assets going up. So I said a lot to say that, just to echo Gonzalo's original point, we won when we bought Oak Park, or as we we got under contract in Oak Park for $76,000 a door, because as you can see, that's that 2016 pricing. Okay, that's really taking it back in time to when a 2-bedroom, 1-bath heavy, smaller apartment complex like this from 1970 is trading at around that number. And we feel like it's very possible for us to double the value of Oak Park in that 5-year process. Now, our underwriting doesn't require it. So let's talk a little bit more about that down the road. But, to pull a deal off like this, you have to know what you're doing. And I think there was a lot of people in 2021, 2022 that were ambitious and they got into these deals, but they truly didn't know how to turn an old, ugly 1970s asset into something that looks more like the kind of asset that can have a premium, will be always filled up, will have a wait list, and that people will love to live at. And if you don't do that second piece, you won't have the results that you're promising. We're really good at that. And I love that Gonzalo's jumping into the mix and going to be working with us because he does bring a lot of experience to the business. But we have a strong Craft Capital Investments and Aaron Katz multifamily group today. We have employees that do asset management. employees that do construction, equity partners that have done this multiple times successfully, can kind of see where things are missing from an operational perspective, and great third-party property management. We bought the Miranda, which is a deal very similarly located. It's in Bedford, Texas, right in the mid cities, just a little small city over. Similarly, has a great school district, but we bought the worst asset we could find in the area. Gonzalo went and toured it with us, and like many, he said, "Oh, why are you showing me this asset? You should be showing me something that's, used to be in the kind of condition of like an Oak Park or something that's really messed up." And I said, I guarantee you, Gonzalo, if you had seen it before we started construction, it was way worse than Oak Park. It had 6 different colors and textures on the outside. All the interiors were a mess. The tenants that lived there were really tough. And I think I'll have Gonzalo speak to what he saw at Oak Park and why we were really pleasantly surprised when we did our due diligence at Oak Park. Because I don't mind turning over a tenant base, but I prefer to keep great people. At the Miranda, there really were not that many of those. We had a lot of hoarders, a lot of pest issues, just a lot of, C-class property living stuff. But we closed on a Friday and we were swinging hammers by Saturday. We brought in a new property management company, all new management. We fixed up the leasing office. It had this terrible, ugly entryway. It almost hit you in the head when you walked in. It looked like, is this really where they're going to try to convince people to live in this place? And we changed it 180. I put a lot of my own blood, sweat, and tears into that leasing office. I'm very proud of it. But I'm proud of what we did as a team because we really proved that we could operationalize these larger turnarounds, right? These larger heavy value adds. And in just 12 months, we've grown NOI, the most important number, the net operating income, the profit by 33%, projected to hit 113% by the end of the year because we've stabilized things. And right now we're just reaping every time we turn a lease, we're getting really big bumps on other income and other revenue. We've more than doubled, we've tripled, 200% increase means we've tripled the other income streams, meaning pest, billing back for utilities. That was a huge one on this asset. Cable and internet we started charging for. A number of other things that we've rolled out to really add up to a huge improvement on the income for the property. So enough dorking out about that. I'm just saying that Gonzalo, me, Aaron, we know how to get Oak Park from where it's at to where it needs to be. And if you ever want to see the Miranda as the case study, we open up the doors every Friday. Gonzalo can meet you out there with me, and we'll show you what it looks like to kind of go from ugly duckling to, sort of rejuvenated property in these good pockets in the mid-cities. And, to get there, I'll leave this up for a little bit, but note that we're going to send this information out. To get there, we have to invest a lot per door, right? So when you include the CapEx per unit of nearly $22K plus the $76K purchase price, we're just under $100,000 a door. And we have plenty of room to go when we look at what the comps that sold before us are currently selling for. And that's without even including the market improvements. So as you can see here, though, a lot of that money is for maintaining and repairing the property. We are going to implement a huge HVAC replacement program. And that's because our team has the inside scoop on a HVAC replacement program where the energy provider pays for 3/5 of the cost of the replacement. So a typical replacement is about $6K. They'll pay, most of that. And then we'll pay $2,600, $2,700 per unit and replace all of the units. There's some additional costs related to building, making the place that the HVAC units are stored a little safer, a little more secure, and a little, frankly, prettier. And, it's one of the big implementations that we're doing. But there's a number of other things. We're replacing all the roofs. Surprisingly, when we did diligence, the plumbing is in really good shape. But we are going to get underneath there and have some capital for when the plumbing takes the turn. Because on these older properties, it's not if it does, it's when it does. And you want to have that money in your back pocket. Got some bids back the last couple of weeks. This capital improvement budget is a little overkill. I think we've got some savings that the team was able to find on a couple areas. But the more capital you have, the better you can deal with the unexpected and still hit your numbers. So we're going to fully renovate all the units, improve and maintain the bones, and add a few amenities. I think three of the ones that were called out are the dog park, the grilling stations, and bringing the laundry room back. I mean, these poor tenants have had 5 years where a simple freeze in Texas, it's all people call it like it's a big thing, but it always gets below zero 1 or 2 days a year. And sometimes older plumbing will pop, it'll break because of the expansion of the water. It's a simple repair on this asset. It would have been $3,000 or $4,000. The owner was going through health stuff at the time. I believe he was still alive. Yes, he was still alive, but he's going through health complications, and he just didn't want to redo that work. He lived in LA. He didn't want to come out here and do the work. He didn't want to invest the capital. So they just shut down the laundry room and lowered the rents. And that was his solution. I could have that thing back up and running in 3 days. It's so easy. It has the machines. So it's something we'll do within the first couple of weeks of owning the asset. I'm so sick of watching the tenants there who don't deserve to have to stuff their stuff in their car and drive 3/4 of a mile away to get to the nearest washing station. So we'll bring that back online as well as some of the other things you see here. And with that, I'm going to show some pictures of what the interiors look like right now to share that they're really not bad. I mean, they are simply put what you want on a C-class asset. Open floor concept, tile floors, some coloring to be desired on the tiles of the backsplash. We will put an acrylic paint over those. Might have said that wrong. We will put a paint over those to make them look more like white subway tiles, one by one subway tiles. But at the end of the day, it doesn't need to be modernized too much past that for this particular price point in this demographic. And once we do the full renovations, we will see about a $250 premium just on a light reno on these assets. But with that, I want to pass it back to Gonzalo. You guys have heard enough from me. One of the things I like to do while you guys are taking a look at these interiors is chat about our process for diligence. For due diligence, we go into every system and we go into every single unit. And Gonzalo was with us side by side. We kind of would go in, come out, confer, because you don't want to be talking about the person's home while they're letting you in their home. It truly is their home. And with that, I know what I saw, but Gonzalo, what did you see when you visited Oak Park?
Yeah, I mean, I saw opportunity, to be honest. I saw a lot of potential to create value, just like you mentioned. Uh, Mostly all the tenants were like hardworking families with kids, and the talking to them, they really like the area. They really like living there. They know all the neighbors. I truly believe that they want to stay there, right? They want to live in that area. They like the school district, especially. They love the location because it's close to, like I mentioned before, Dallas, Fort Worth. It's right in the middle of everything. And the units obviously need some TLC, right? And I think those minor improvements that you mentioned are gonna create lots of loyalty and lots of tenants that are gonna stay here for a long time. They have been there for a long time. The ones that I talked to, they have been there for the longest time, 2 to 3 years, some of them even 5 years. There was one tenant that has been there for like 10 years. So even with reasonable increases, I believe that they will stay, because of a better living product, right? And what that translates to, it translates to happy tenants, and that equals paying tenants and less vacancies, right? And that's gonna help us out in our cash flow, in our numbers. So Oak Park is already a great opportunity for anybody, even for somebody that doesn't want to do everything we're gonna do. It's just a great investment. That's what I saw, bottom line. I mean, tenants are happy and they obviously need some help, and we're gonna provide it to them. And that's what it's all about, all about people, all about keeping your customers, in this case, tenants, happy so they can stay longer there.
And one of the things we saw was that it's got all of the right bones, yet nobody's thought through some of the little improvements that can make a huge difference. One that we found that tenants love, the living rooms on these older apartments tend to not have any fixtures, right? So you come in and you might have to plug in like a wall lamp to get a living room that has the right level of light to it. What we do is we put in 6 can lights with a dimmer. It costs us $800. It takes about a day to do that project, and it completely modernized the look and feel of these 70s assets. It makes it feel like it's one of those 2010 vintage living rooms because it has the right level of light, the right texture of light, and it's just so easy for them to use instead of them just having to go out and buy, a cheapo standing lamp that they plug in alongside or near their TV. So we really love that fix alongside some of the other things that we mentioned that we do. Backsplashes in the kitchen, sort of redoing the fronts of the cabinets and bringing in all new appliances, including bringing back dishwashing machines and bringing in microwaves. We measured, checked that out today, and sorry, not today, last week, and we really feel like we got the right handle on what we're going to bring to this interior renovation. A lot of stats here. Again, we'll send out the numbers here. The easy cheat sheet version of this is that Dallas Fort Worth is the best market in the country most of the time. And if it's not, it's always in the top 5. And there's 19,000 cities. Dallas Fort Worth is growing faster than any metroplex has ever grown in the United States. So LA at its peak, Las Vegas at its peak. Strangely, neck and neck with Dallas is Houston. Houston has really taken off too. Texas in general is a great place for people to relocate from within the United States. It's also a top corporate headquarter magnet, specifically in in Irving. They're having a brand new Wells Fargo sub headquarters and a Goldman Sachs headquarters that will be coming online within the next year. And that's why I think it's been the #1 growth metro, particularly an amazing place for investing in multifamily. And one of the things that we like to compare to, though, is the median home values. When we see median homes that are not affordable, that is a great indicator that there will be continued demand down the road. Right now, the median income the median home value that you would purchase a home for in Irving is well above the Dallas median. And it's a 349K number. It's very challenging for a family to come up with the down payment for that, even when they use some of the programs that allow for lower down payments. So affordability is a huge concern on the single family side, and that only gives us more strength of conviction that there's going to be demand on the apartment side. It's why you see high occupancies in all of the Irving submarket. With that, I'll go ahead and take a look specifically at our business plan, because what's cool about commercial real estate versus single family, I used to do single family a decade ago, but sort of moved into commercial real estate because you have a lot more control over how you create value. If you increase the profit, it's a business, right? It's a small business that we're buying. And if we increase the profit, we increase the value. In this case, we see a very clear path to adding over $200,000 in revenue every year just by bringing occupancy from the low 80s up to the mid 90s. And the fun part is the current owners, because they got a better property management company about 6 months ago, they actually had real property management company. They're already almost there. They're at 88%. Now, there's a couple other things that we need to do here. You can't just bring occupancy up to 93% and be done. I want to add a lot more than $207,000 worth of revenue. So we're also going to bring rents up to market. Rents are about $250 below current market. In its current condition, they could be asking for more and people would stay and pay. There's no other income that's really being driven here on this property. We can at least get to that 80, 90, 100K number for other income. And lastly, we're upgrading every unit. Upgraded units have a premium. They've got that backsplash. They got those can lights. They have new appliances, a full appliance package, refinished cabinets, resurfaced countertops in the bathrooms and in the kitchens. And with that, there's a comp right across the street. There's another one down the road. You can add an additional $250 plus per, depending on the unit size, for the premiums there. All in all, we see a path towards 770 plus annualized income. A conservative reversion cap, and again, this is where you get into the math of commercial real estate. You're dividing by 6.3%, a conservative cap rate would create $6.1 million of value. Gonzalo and I are very confident that within that 5-year range that we talked about, we can get there. But we don't need to get all of those things done right in order to hit this business plan. In fact, in order to double your money in whatever period of time we can do it in, we just need to create about $4.1 million worth of value, because there's about $4.1 million worth of equity in this deal. And we see a very clear path to more than that, as described here. Near the last set of numbers I'm going to throw at you guys, I just want you to see where the money is being used. We did raise $3.7 million to date. Gonzalo has $400K earmarked. You all can only get into this deal by working with Gonzalo. Everybody else on my database is waitlisted. I have a long waitlist, but Gonzalo is the opportunity to dance on this Oak Park investment. We're going to use 2.6 to pay the down payment and a little bit over 1.3 million for the rest. I want to be specific here though about the closing costs, because it's a gigantic number. That's not truly closing costs. It's closing costs, AC fees, and interest rate cap for a full 5 years. Most of that fee is the interest rate cap. This is so that we can ensure that we've got certainty of our debt service. Basically, we want to know exactly how much we're going to pay every month. And to do that, we have to buy a certain type of insurance that keeps our rate at 6.7% all in for 5 years. So that's where the money is going: down payment, closing costs, reserves, and working capital. We like to keep about 2 months worth of working capital off to the side. And because we're taking this deal down and we're getting 100% of the CapEx, the construction costs from the bank, they're requiring that we put some money off in reserves so that we can make sure that we pay our debt service while we are leasing up and improving the asset. Our biggest lender on this deal, our biggest investor on this deal is not any one of y'all. It's not me. It's not Aaron Katz and his dad, who both put in substantial amounts of money. It's not Gonzalo, who's going to bring a lot to the table as well. It's the bank. And for this deal, the bank is willing to give us $7.83 million of loan proceeds. All right. I think I talked about the loan. 7.8, 6.7% interest is fixed because of the interest rate cap. It's a 3-year loan, but has 2 1-year extensions built in. And the reason we chose this loan is because it provides us the shortest path to a refinance with the least prepayment penalty. It is a almost non-prepayment penalty adjusted loan. So when we deliver, we'll all be able to meet our pro forma projections. But if we over deliver, it allows us to get into a new loan with a lower rate, more stabilized, maybe pull out some cash. And that's an opportunity where we could then over deliver. Now, obviously, we'd love to just even hit our pro forma, because we'll be able to double everybody's money in 5 years. But there are some opportunities for us given the loan that we chose for this asset. We've done business with Bancorp. This will be the second loan we've done with them. They got aggressive on the terms because they really liked what we did on the Miranda, and they felt very confident that we could pull it off on Oak Park, given our purchase price. With that said, these are directionally accurate for those of you that come in with Gonzalo through his fund. You're looking at about $100,000, $98,890 of projected profit on your $100,000 investment. So again, if you put in $100,000, you're going to get a little less than $200,000 back at the end of our 5 years. These are projections. Things can shift up, things can shift down, but we're looking at this as a fair place to tell you all where we're aiming. And that gives you an average annual return of about 19.75%. So about 20%. Cash flow on this deal is pretty thin. Frankly, I'm just straightforward. Until we refinance, we're not really spitting out a huge amount of cash flow. We need at least that first year. And if we don't refinance, we'll stay at that lower 4.68% number. But we do have a model where if we refinance in year 3, it shoots all the way up to 7.5% and continues to stair step after that. So, note that this is the unhappy path where we stay in this loan at 6.7% for 5 years, but we can generate more cash flow if we can speed and do this business plan faster and get a refinance that we're comfortable with. So I think Gonzalo talked about that. I've talked about that in length enough. Use this as your base case for figuring out what your cash flow is going to be. We love these investments, not just for the cash flow, not just for the overall return, but for the tax benefits. On this deal, you are catching a historical moment. The big, beautiful bill will bring back bonus depreciation, backdated to early January. So this deal will allow for 100% bonus depreciation, and it's a heavy value add. So on the heavy value add deals where you're not making a whole lot of cash flow the first year, and it took a lot of CapEx dollars to get there, these have the best returns overall. Sorry, the best tax advantages overall because they show the largest year 1 losses on paper. You'll get a huge paper loss if you can take advantage of it. Now, I'm not going to share specific numbers because everyone has a different tax situation. Some of you may choose to take advantage of the tax benefits. Some of you may choose to just say, hey, this deal's doubling my money in 5 years. I'm not going to get complicated with trying to take advantage of the tax piece. Consult with your individual tax providers, and note that if you can take advantage of the tax advantages, this deal becomes an absolute no-brainer. There are huge advantages on Oak Park that we can talk about one-to-one. I'll leave you with some of our best practices, and then I'll let Gonzalo talk to people about how they can get in the deal if they're still interested. And look, you guys stayed on. I really appreciate it. We're going to try to end at the on-time mark, but most of the people that joined us in the beginning, all but 2, stayed on through the whole presentation. We really appreciate it. So with that, my kind of closing words are expect transparency. I'm not just saying that like I will give you my home phone number and my address. Gonzalo is very easy and approachable. You jumped on because you trust him already, right? To put this opportunity in front of you. But it's very rare that you can invest in something and then call the CEOs of the company in anytime you want to. But that's what you have here. The reason I like these investments and the reason I did thousands of doors as a passive investor before sponsoring these deals myself is because of the transparency. If you pick well, if you pick a good team and they open up the door for you whenever you want to ask questions, you'll learn a lot and you'll feel a lot more comfortable about your $50,000 plus investment in the deal. So we do monthly reporting. Every month, you'll get access to our financials. You'll see our profit and loss, as well as like a qualitative overview of how the deal is doing. You're busy. The whole point of you investing with us is you don't have to do all the work. You don't have to change out the toilets. You don't have to figure out how the financials are doing. We'll do that. But when you check your email, you will have the comfort of knowing you've got a big explanation of how things are going each month. When we start distributing capital in year 2, those will happen every 3 months. So those will be quarterly distributions for those of you that are going to be watching those distribution numbers. Annual tax preparation. So you will get 1K1 for this investment that you can give to your tax professional, or if you do it yourself, you can enter it in, choose your favorite tax software. But it's very easy. And we try to get that done before March 15th every year so that those of you that will be investing with an LLC can kind of meet the annualized business deadline. And you'll be well before the April 15th deadline that most people will need to hit. If we do a refinance, we distribute all that cash and we don't water our investors down. That's what Gonzalo was trying to allude to earlier. Some people set it up so like if we do a refi, y'all don't own as much of the deal anymore. I think that's unfair. So we have set it up such that when we refi, we shoot your portion of the profits to you, 75-25 split, and then we keep it on moving and you still own your portion of the 75% of the deal. And then if we sell the property, obviously everybody gets their original investment back, and then we split the profits 75-25. You guys get 3/4 of the profits, even though the traditional single family thing is like a 50-50 split. Obviously, in these commercial real estate deals, it's a lot more money. You're doing this to make money. We want to be able to double your capital. And to do that, we offer up more of the profits to you. So hopefully you guys get an idea of what to expect. you ever want to go visit the property, easy to organize a visit. We typically bring investors with us because we visit the properties on Tuesdays and Fridays. It's kind of what we do once it's stable. In the beginning, I'm going to freaking live there. My car will be a regular fixture on the parking lot. I'll be there like 5 to 6 days a week, taking care of business, getting the construction projects underway, making sure the office is moving and doing what it's supposed to do. Those are the important parts, right, during the takeover. But when it stabilizes, every Tuesday, Friday, we still go check back on the assets because we all live here in Dallas, and me and Gonzalo and the rest of the team. But I think there's an opportunity here if you come to town to go ahead and visit the asset. With that, I'll pass it back to Gonzalo because he can share with you how to invest through him into this deal and what you should do next if you're interested.
Okay, guys, well, you seen what a great opportunity this is, what we have on the table for you. As a reminder again, there is like a lot of benefits to this investment. The main one is to the opportunity to double your money in the next 5 years. The second one is to access the powerful tax benefits that Gabe just talked about, like bonus depreciation and cost segregation. And most importantly, beat inflation, right? Putting your money in a cash flowing asset, appreciating asset that is going to double its value in the next 5 years. If you're really interested in moving forward or simply have any questions, please reach out to me as soon as possible. There is a timeline for this. I think it's like the next 2 weeks, right, Gabe? I mean, that's
For
what I
your
know.
investors
So
only. My
as soon,
investors had to fund by tomorrow. But yeah, we're going to give a couple. So
yeah,
what we'll ask is 5 days to make a decision and do the paperwork. After that, we're going to
yeah.
offer up another, I can do the math here, another 9 days if you want to take your, to coordinate with Gonzalo. Maybe you need to get liquid by selling off some stocks here and doing your thing by moving money into this opportunity. So, but the paperwork doesn't require anything special other than coordinating with Gonzalo, and he won't be able to offer you the paperwork for a few days. So it's 5 days after Gonzalo tells you it's go time. Here's the paperwork. That means you have a couple more days to consider, right? Because Gonzalo should have the paperwork within the end of this week. He should have it ready for you to be able to invest through him. And with that, I think the main thing to do is if there's a consideration here for you to be in this deal, scan that QR code when when we send out the copy of this deck. Click on that link; it'll take you to the same place, and it's just a commitment form that's very soft. There's no formal commitment. It's a Google form where you fill out some information about how much you're interested in investing, so that Gonzalo can follow up with you and get you all of the paperwork you need to solidify your spot, and then you can start the process of moving some money around.
Yeah, so like Gabe mentioned, if this is the right investment for you, please go ahead and scan the QR code. It's gonna send you to a form where you're gonna soft commit. It's not nothing, it's not a big deal. We just want to get an idea of who is really interested in this deal so we can give you an invitation to our portal where you can review all the offering memorandums. In that same portal, you're going to upload your information and it's going to instruct you how to make your investment. Also, you will get access to the monthly reports and the status meetings, as mentioned earlier. So, like Gabe mentioned, most of the capital has already been raised. So, we have a portion of it for this group. So I would like to know who's in it. Thank you again. And again, I look forward to welcome you as a partner of Craft Capital and myself in this great project. Thank you so much, guys.
And I think what'll be easiest is since you guys are buds with Gonzalo or you know him, through business relationships, um, he can handle any additional questions you have about the deck after we send it out one on one. We should have it live on YouTube for video recording if you want to revisit something that we said during the presentation. But he will also be able to email you the PDF by tomorrow. So stay tuned for that email, follow up email with some of the materials. And then if you want to jump on his calendar or reach out to him via text, as you see the phone number there in the bottom left, He can answer any questions. If it's something that he doesn't have direct access to, me and him talk every day, so it'll be easy. And we'll follow up. All right. I appreciate you all. This was great. Gonzalo, your friends really showed up. It was a great turnout. And if they have any questions that you can't answer, please feel free to ping me tonight.
Sounds good. Thank you. Thank you all. Thank you for your time. Bye.